Okay, hello everyone. I believe I've gotten the all clear to begin. This is Kathy Lien with BK Forex. I thank you all for joining me today for our non-farm payrolls preview. Non-farm payrolls is always very important, and I think that just like every other month, this report will be one to watch, particularly since a lot of the major currency pairs have been consolidating within relatively bounded ranges. So with that, I'm going to try to share my screen. Actually, I'm going to do my entire screen. Okay, so I'm going to share my... All right, not sure what just happens there. Okay, we're going to stop sharing that. Came a little complicated, showed everything. Let's see what if I just share my application. Okay, so basically, I'm providing you with our non-farm payrolls preview. And inside this non-farm payrolls preview, what we're going to be looking at is we're going to be looking at what the leading indicators for non-farm payrolls tell us. And we're also going to be looking at what currencies could potentially provide us with interesting opportunities going into and out of the release. So I'd like to start with the expectations. So what I'm going to do is I prefer to share my entire screen. So let's try that again. Let me know if that's coming through okay, because I want to share my Bloomberg screen. Let me know if you see the Bloomberg screen okay, please. Can you see the Bloomberg screen okay? Great. So let's take a look at the expectations. In regards to expectations, change for non-farm payrolls is expected to be lower. The market is also looking for the unemployment rate to hold steady, average hourly earnings growth to hold steady, and the same with the weekly hours works. Now, of course, chances are those three elements, unemployment rate, average hourly earnings, and weekly hours, are not going to hold steady. Chances are we are going to get some type of surprise. And that surprise is going to be what matters the most to non-farm payrolls. Because if you take a look at the overall amount of job growth, let's take a look a little bit at the history of the NFP release. And you'll see that for the past 2 months, we've had relatively healthy non-farm payrolls, good numbers that suggest to us we could see a retracement, because after 2 months of good numbers, given the Federal Reserve's kind of reluctance to jump on the gun on another rate hike so quickly, tells us that perhaps we could be in a scenario where they may think that the strong growth we saw in the previous months could be given back. So the risk is certainly for a lower number. But let's take a look at what the leading indicators for non-farm payrolls tell us. And I'm going to keep a running tally on my notepad here. And I'm going to reiterate it to you. Every month with non-farm payrolls, we look at 8 leading indicators for non-farm payrolls. 2 of them came out today. So Challenger job cuts. You can see Challenger reports a significantly smaller amount of layoffs, 2% versus 40%. So that certainly favors a good NFP number. Jobless claims, let's take a look. We know that jobless claims hit a 5-week low, but I'm trying to find the historical table here. Historical statistics. So the 4-week moving average of claims did tick up from the end of February. So 4-week average claims increased since February. What about the continuing claims continue to fall. So actually, continuing claims, I would say, is at, actually, it's hard to say. Continuing claims are down. I would say they're still down slightly, but they kind of bounced around. So say down slightly from February. We know, let me just go back to the US data. We know that ADP was very strong yesterday, so let's just scroll down for a second. ADP was very strong. So ADP reports 263,000 versus 245,000. But the problem is that the employment component of non-manufacturing ISM fell significantly. So and I'll show you the table. So non-manufacturing ISM employment dropped to lowest since August. And I want to show you, let's see if we can get this correlation with non-farm payrolls. To get total net change. There you go. So you can see that there's a very strong correlation between these two releases. Obviously, the magnitude isn't always the same. And that certainly suggests that we could have a nosedive in NFPs on Friday. What else do we look at? We also look at University of Michigan Consumer Sentiment Index. Let's see if we have a more recent one. 96.3. Let's just take a look, see where it was. So Mitch, confidence is up. And let's see if we can find the conference board's release. Consumer confidence. Here, conference board. So this measure was very strong, 17-year high. So we have 5, 6, 7, and the last one is non-manufacturing ISM, which we can actually just look at the latest ISM number. It's embedded in there. Taking a look at non-manufacturing ISM, or sorry, manufacturing ISM. Factory employment strongest. So ISM manufacturing employment strongest since November 2013. So where do our tables line up? Well, I told you at the beginning we have 8 leading indicators for non-farm payrolls. And of those 8 leading indicators, 6 of them suggest that we're going to have stronger job growth. And only one of them, really, non-manufacturing ISM, suggests that we could have a miss. Now, of course, that is also the most important leading indicator of NFPs. But part of the reason why the dollar is holding steady and why yields are up so much, 2.3 basis points, is because we are seeing, we're certainly seeing a scenario where the market is positioning for a strong number. So what would constitute a strong number? First of all, the headline doesn't need to be that good. Headline just needs to be 200,000 or better, and the market will be satisfied. Of course, the market wants to see the unemployment rate hold steady or drop, but most importantly, when it comes to trading non-farm payrolls, the most important release is hands down average hourly earnings. And because average hourly earnings growth slowed a little bit, I think that there's scope for a little bit of acceleration. So, that's really the most important component of the non-farm payrolls report on the most on Friday, and that's really the one that you really, that's the number that you really need to watch. So how do we trade non-farm payrolls? Well, first of all, there's a couple things to be aware of. The market is basically positive dollar right now, but it's kind of struggling with dollar yen. So if the number is good, first of all, I take a look at dollar and yen. We're kind of hanging out right under 111. If the number is good, you could sell euros, buy dollar yen, because euros got a lot of uncertainty, and there's definitely a scenario where we could see euro take out support at 106, 30 because euro's been trading in a very, very tight range. There's a very good possibility we could see euro dollar take out 106.30 if non-farm payrolls is strong enough, or if average hourly earnings grows. Now, if the number is weak, euro dollar I don't really think is the currency to trade. If the number is weak, I think that the opportunity is going to be in selling dollar yen for another run back to 110, as well as maybe picking a bottom in some of the calm dollars, like Aussie dollar, which has fallen to the 200-day SMA, or Kiwi dollar, which has kind of fallen quite a bit down to its range. So that's definitely something to be cognizant of, because we're definitely in a position where we could see the calm dollars bottom out off of a soft non-farm payrolls report. Now, non-farm payrolls is not the only thing that you'll need to watch. Friday, you're going to have Canadian employment numbers, and next week we actually have the Bank of Canada rate decision. Now, within Canadian employment, previously the February numbers were very strong, 105,000 full-time job growth. It's going to be very difficult to match that. I think we're going to see some type of reversal, and I think the risk is going to be the downside for the Canadian dollar off of the Canadian employment report. And let's see if we can see some of the more recent data from Canada. Taking a look at some more recent data from Canada, retail sales have been good, but inflation has been kind of low. GDP has been kind of good, trade low. So a lot of mixed bag. So that's why the employment report is going to be so significant, because that'll really give us a sense of how terrible conditions may be, or how well conditions may be for Canada. So definitely keep all of that in mind. And we have the summit between President Trump as well as President Xi of China. So headline risk is going to be significant. The summit begins today, goes into tomorrow. Likely tomorrow, we're going to get the press conference. So be careful, because politics can easily trump economics, and we could realistically see a scenario where any negative comments about the currency or trade lead to a sell-off in the US dollar. Because if Trump is going to push a country like China for a stronger currency, that ultimately is negative for the US dollar. But you can see yields are up today, they're doing quite well. And so I think that there is, right now the market's trading like things are going to be looking rosy and up. So definitely be kind of aware of that, because that could be that could present itself as some type of opportunity. I'm actually looking at dollar CAD. Just in the near term, dollar CAD looks like it's a little toppy, but we're more bearish than bullish Canadian data tomorrow, so I'd be cautious about just jumping in and selling dollar CAD right off the bat. So, that's pretty much what we're thinking for non-farm payrolls. Do you have any questions or charts that you may want to look at? Any questions or charts that you may want to talk about? We love trading non-farm payrolls, even though most people don't. We live trade non-farm payrolls with our members every single month, or almost every single month. We've done it for the public a few times, and in our experience with regards to trading non-farm payrolls, unless you have a very, very strong view, typically it's best to wait. It's best to wait for the number to be released, see what all the components show, because there's so many moving parts. It could be revisions and things like that, and then only afterwards consider your trading opportunity. So it does pay to wait, and generally speaking, even though we talk about the preview, what we think could happen, the best thing is to trade it afterwards. And Ahmed, I'll show you how to trade. If you become a member of BK Forex, we trade it, like I said, live with our members every single month. We actually did it for the public this past month, and was able to make some good pips off of that as well. So that's where we kind of concentrate our opportunities. Any other questions? All right. If there are no additional questions, thank you all for joining me today, and hopefully you got some good insight into non-farm payrolls. What do I think about gold? Well, let's take a look at gold chart. So gold, you can see, is just kind of consolidating. Again, I think it's looking toppy. If I had to lean one way or the other, I would say that I'd be more bearish gold than bullish gold. Now, if you're looking at the we pretty much have the same chart. It definitely looks toppy. Looks toppy to me at these highs here at 1257, and it would be consistent with the momentum that we're already seeing in the markets right now. Actually, I just realized I didn't pull up the chart, so let me share with you my chart. Yeah, so this is the chart showing how we have a double top here rolling over. Definitely looks like it's going to move lower, in my opinion. Dollar CAD, technically dollar CAD looks like it's toppy, but we're negative the data, so be careful about jumping into a short dollar CAD trade. Although you could ride it for this evening. I think we may have a pullback to maybe 133.75. Dollar yen looking very strong. Yields are up. We've got a bit of a trading range today. 110.90s to 110.70. You can play that range for a little bit. You can see in my 4-hour charts where that we've got a lot of resistance around 111, but right now it does seem to have more of an upside bias than anything else. Non-farm payrolls has a very significant impact, Brendo, on the dollar. A good number is going to be good for the dollar. A weak number is going to be negative for the dollar. So that's really the way you should be thinking. Lance, I'm not too sure what your question is. We're not talking any specific trades or anything at this stage. Any other questions or charts you may want to look at? I actually use a couple of moving averages. I like to use the 20, 50, 100, and 200. Find them to be all fairly important. Good questions today. Much more interaction than we typically get, which I like a lot. Any other questions? 20, 50, 100, and 200, correct. Pound dollar chart. So pound, I think, is looking toppy around 125. I tried to make a run for 125. And with the dollar kind of firming up, I think that fading 125 could be a pretty good trade here, a low risk trade, going back down to 124.50s or so. Yes, Albert. Average hourly earnings will be the number one most important component of tomorrow's report. Any other questions? Let's see. Do you have classes? Yes, you can go to bkforex.com and go to Forex courses. There's quite a bit of them there. bkforex.com. I'll even show it to you. And you can see Get Forex courses. I don't think Aussie is going to go much lower. I think there's pretty rock solid support around 75 cents. Loving all the questions today. Any other questions? All right. If there are no additional questions, all right, I think one's coming in. If before a news trend goes up, what to do? If we're really close to a non-farm payrolls report, I would suggest just not being in a live position. You may be able to trade the dollar tonight or so, but I don't really see much more beyond that because there is a lot of uncertainty because it's not necessarily negative. It's not negative report is not a given for the non-farm payrolls release because there's so many other leading indicators that suggest that it could be stronger. Any other questions? How often are you on this live channel? Only once, once a month, maybe once every other month. I'm not on here often. We do live things with our members every single day. So, I'm quite busy with our 24-hour chat room too. So I'm quite busy doing that on a regular basis. But I'm glad you're enjoying it. Okay, so if there's no additional questions, once again, I'd like to thank all of you for joining me today, and good luck trading non-farm payrolls.